Good morning guys, Joel Frank here, market analyst at YouTrading. Today we're taking a look at euro dollar. The technicals in euro dollar are interesting me quite a lot at the moment because they've become increasingly bearish in the last couple of days. I mean, to start off with, you can see here that this week euro dollar has broken below its 200-day moving average and is now actually just this morning, oh no, I think we did it yesterday as well, we're back at fresh monthly lows. And let me just show you some other technicals that are going on here as well. So first of all, there's this bearish trend line that we are respecting very, very well for euro dollar. You can see we've respected it really well in the last couple of days. Every time we've tried to rally and go back towards that 21 DMA, the sellers have come in again and pushed us lower. And perhaps more importantly, there's this level of support that has then turned into resistance, which is also held up very well. You can see that right here. You can see it was early March, it was support, then we broke through it. Now we've tested it twice. That's turned out to be a double top. Where is that exactly? Yeah, it's just under 120, this area here. And yeah, ever since selling off at these technical levels, it's become quite bearish. So fundamentally, what's been going on with euro dollar? Do the fundamentals match up with this kind of more bearish sort of technical outlook? Well, I mean, I would say yes. I mean, let's go through the list of things that are going on in the US versus the EU. Well, I mean, in the EU, the big story recently, or the big story at the moment, is the fact that the continent basically is being hit by a third wave of coronavirus, which is unfortunately being exacerbated by the fact that the EU's vaccine rollout has been not going as well, anywhere near as well as has been the case in the US. Remember, with the US, they've been reopening their economy. Coronavirus infection rates have been falling. Their vaccine rollout has been going really, really well. So the pandemic situation definitely bearish for euro dollar. But then there's other factors as well, such as the fact that the ECB have been signaling that they are keen to expand their, or they already are expanding their QE operations in order to keep government bond yields low. Whilst in the US, they've signaled no such thing. So that basically the ECB are more dovish than the Fed. And then from monetary policy, which has been bearish for euro dollar, you've also got fiscal policy, which seems bearish for euro dollar as well, because you got the US government that's just passed this 1.9 trillion stimulus package. They're already talking about this 3 to 4 trillion infrastructure focused stimulus or recovery package, they call it. Whereas in the EU, you have this 750 billion, which is tiny compared to 1.9 trillion and then 3 to 4 trillion. But you had this 750 billion recovery fund that was agreed on last July, I think, and not a single penny of the fund has been distributed yet. So the Eurozone economy really needs that money to get kicking again, but it's not getting it. So yeah, all of this has been tilting euro dollar lower. And bear in mind, US government bond yields have been rallying a lot more than European government bond yields, which has been widening the US interest rate advantage, which is also all feeding into this sort of bearish euro dollar feel. So where next then? We've broken through a lot of these key support levels that I was just talking about. If we zoom out a bit, we're quite zoomed out now, but you can see the big area that I think we could move to is the bottom of this range from, well, the back end of last year, basically. I mean, I think that's November and that is September. The November and September lows just above 116. This is a long-term play, and I mean, who knows what's going to happen? It's markets, and nobody ever knows what's going to happen. But if there is a convincing break, of this area we're currently testing, which is, yeah, the low 1800s, well then I don't see why we couldn't see a gradual move all the way back to the bottom of this range, I think you could call it. There are a couple of technical hurdles on the way. I mean, you've got a low here. That's the some late November low, and then I guess you got this other low here that will slow the downward progress. But yeah, I think once we get through this level, the floodgates could be open for a bit more selling. But anyway, guys, hope you enjoyed the video, and I'll see you all in the next one next week.